All right, guys, back to work tonight. Hope you had a fantastic day. Hope you made some money out there today. But it's back to work. It's Wednesday evening. We're getting ready for a very important Thursday trading session. Now, we talked about bear traps in last night's video, and we definitely got some beautiful entries this morning in our morning trade room, but we never quite got that big jump this afternoon we're all hoping for. So is this the beginning of the end? Is this now a bear market? Is it time to get short? Or the bears just sitting there waiting to get squeezed, reversal going higher tomorrow? I'm gonna answer that question, and I've got some great trades we're tracking on both sides of the market for tomorrow. I'm gonna cover all my favorite trades in the video here tonight that we have a game plan to make some money on Thursday. Before we jump in and get the party going tonight, make sure you subscribe to our channel. That way you don't miss tomorrow night's video upload. And if you enjoy the stuff, do me a favor, hit that like button, give me a shout out, give me a holler down in the comment section below. Thank you so much for tuning in, supporting the channel. But enough of the intro, right? I'm a few minutes behind schedule. Let's get this video going here tonight. Where are the best trades setting up here for what might be one of the best days of the week tomorrow in our members trade room? But I'll tell you right now, the Emini and the Nasdaq have some beautiful ranges on the charts here this evening. I mentioned a moment ago, we never quite got that big bear trap reversal we wanted to here today. And this range, of course, tomorrow gives both the buyers and the sellers plenty of money-making opportunities tomorrow. We'll cover both sides of the market, where my favorite trades are as we go deeper into the video tonight. Oil is definitely very bullish right now, but this might not be the easiest place to be buying. We talked about in last night's video, we're in one big range right now. I do think buyers have opportunity for another leg higher, but we have to be careful, and I'll talk about why I say that and how to make some money on it in the video as we go deeper into the lesson here tonight. So oil is ready, Nasdaq is ready, S&P is ready. We're going to cover a lot of great trades in just a moment. Before we jump in though and go into detail of my favorite trades for tomorrow, let's all get on the same page. Take a look at the schedule for tomorrow morning. Tomorrow's a Thursday. The two most important things you want to keep on your radar for tomorrow are going to be 10 a.m. Eastern Time and 11 o'clock Eastern Time. Now, we have Jerome Powell back on the testimony tomorrow at 10 a.m. But as I mentioned in last night's video, day number 2 of his 2-day testimony is normally not nearly going to be as big of a variable as it was for today, right? We saw how the market slowed down as they're listening to Powell pretty much repeat himself from what he said last week. So I'm not so worried about Jerome Powell tomorrow morning at 10 o'clock Eastern Time, but anytime we have a Red Star news event at 10 a.m., you definitely want to be paying attention. Later on in the morning, we've got the weekly inventory report for crude oil traders. Remember, this weekly oil report is usually on a Wednesday at 10:30, but because of Monday's holiday, it gets pushed back into Thursday. Be aware of that tomorrow if you're trading oil like we do in our trade room. I actually prefer it at 11 o'clock on Thursday because it gives a bigger window of time to trade tomorrow morning on the crude oil. So be aware of that. 10 o'clock Eastern Time. If you could only be at your desk for an hour or so tomorrow, I would definitely make sure you're there for that catalyst at 10 o'clock Eastern Time. And then we'll grab the popcorn, watch the fireworks at the 11 o'clock weekly inventory report. So keep those numbers on your radar. Back to our charts though here, because of course the money is made on the charts. It's nice to know when the news is because the news will act as a catalyst, but we trade the setups we see on the charts. Now, if you like making money, I would definitely make sure you watch the entire video here tonight because every trade I talk about tonight can be applied to your favorite market. The S&P, the Nasdaq, the crude oil. I will wrap this all together and I'll make it worth your while to watch all the way to the end. A couple things before we jump in. First of all, tick charts. These are all tick charts here on the video here tonight. All the time frames are in the upper left-hand corner. This yellow line is the 21 EMA. What's the most important factor right now on the S&P? How do we know where the best trades are setting up on the E-mini? Well, to get that information, let's start with the 60-minute chart. Now, as I always tell you guys, I like to use the higher time frame chart as a directional filter, along with finding major turning points, major swing highs, and major swing lows. The game plan is pretty similar to what we talked about in last night's video. We have a very strong bullish run here on the 60-minute. Anytime we see a strong move in one direction, we're expecting a deep pullback and a retest of the high. So buyers right now, we have to assume that as this market is going lower, buyers are buying into this move, simply looking for the market to eventually make its way back up and take out that high just shy of 4,500. Now, I mentioned earlier that we never really got that big reversal we were hoping for today, right? We got a couple nice entries off bear traps off the lows this morning, but we never quite got that reversal. So is this a bear market now? In my free trading classes, and of course, throughout our membership classes, I talk about ways to use the 21 EMA. And separation is one of the most important clues. Notice back here, notice how the buyers are getting good separation, right? Look how they're jumping and separating off that 21 EMA. That is a very good sign of a bull market. Now, look at the pullback right now. What do you see? No separation, right? Look at how the candlesticks are literally almost glued right to that 21 moving average. So is this a reversal? Is this a bear market right now? Well, not yet, right? Not yet. This is nothing more than simply a deep pullback in a bullish overall trend. And again, the 21 moving average, the way they jump and separate off the moving average going higher, the giveaway is that stickiness around the moving average right now. So the most important clue is the 60-minute chart right now says we want to be a buyer. We're definitely not a bear market yet. Now, let's go back to our main trading time frame on the tick chart. I like to use tick charts for the entry patterns because they make entry patterns a hell of a lot easier. Now, one of the most important clues right now is on this chart in front of us. We have a bear market into a trading range. Now, if you've taken my free trading course, you know that ranges love to rotate and they're magnets. So what I want you to think about now is the amount that we go, well, basically, ranges we're going to rotate back and forth, back and forth. The amount we go above the range, we'll want to rotate roughly about the amount that we go below the trading range, right? So we're expecting these bears to finish off this rotation down into key areas of support below. Now, ranges also act like magnets. So think about what this kind of tells us now. If we know the 60-minute chart is still an overall bull market, and we know that we've got a lot of support down below that trading range, and that range acts like a magnet, are you starting to put these pieces together right now? Absolutely. This is a pretty straightforward game plan for tomorrow. My favorite trade for tomorrow is going to be a range rotation reversal, right? Basically looking to buy off support below that trading range. Now, there are ultimately 3, maybe 4 different entry pattern variations of how to buy off of this low right now, knowing we're overall bullish, knowing we got support below the trading range, and knowing that range overhead is a magnet. So we're going to talk about those variations. That way you have a game plan. No matter what happens, you can make money on this for tomorrow. I also, later on in the video lesson, I want to talk about if we don't get that rotation. Because if we don't get that rotation, what does that mean? That's a very bullish clue, right? Very bullish if we have what's called failed rotation. All right, so I want to make sure you're aware of that too. We'll talk about that. There are 3, maybe 4 different reversal patterns and breakout patterns we'll talk about as well. Some of them are going to be selling it short back down again. All right, so let's dig into it right now. You know what where my head is at on this right now. Now, let's talk about my favorite trade for tomorrow, which is kind of that range reversal, right? That reversal off support below the trading range. Now, in my free trading course, we talk a lot about what are called failure patterns, right? Failure patterns are going to be your bread and butter in a range-bound market. Now, if we end up running lower down here, I like the idea of buying at support, but what's the problem? The problem is momentum, right? We're bearish into a trading range. We're bearish running lower. Again, we're still an overall bull market, but momentum will be a little bit too bearish to simply try to pick a bottom, right? Picking bottoms can be very, very difficult. A much easier way to make money for a range reversal than to try to pick a bottom on this is let the sellers show us they're entering into support. This is a horrible place to be selling short. You're at support, overall bull market, range, magnet above you. If we can get some rookies, some inexperienced traders to try twice, to try a couple times, now what we can do is we can use their stops, right? One of the easiest ways to make money in a range, don't pick the bottom. Wait for the sellers to get trapped in, and then think about, as my first mentor always said, think about where you can trade into their pain, right? Think about where you can run those stops, nice strong signal candle, and get that run going higher. Now, a lot of times what happens is these things will really jump, right? They'll jump up and they'll pop. One of my favorite follow-up trades on this is what we call a trap pattern. Okay, in this case, it'd be a bear trap. Bear traps are very, very common as we go back up into this trading range, right? So look at this setup, right? Again, wait for the breakdown into support, get those bears trapped in, use my failure pattern to buy off that low, and then as we're beginning to run higher, remember, ranges love to rotate. So the amount we go above, the amount we go below, and where do they want to go next? They're going to want to go out and take out these highs. On the way up to those highs, look for that strong move, that shallow pullback, that higher high in price, and that bear trap. Now, we talk all about these in the free trading course, right? That's one of my favorite trades right there. Now, I know that most of you guys have taken our free trading classes. You've learned things like failures and traps, but if you're watching for the first time right now, if you haven't learned these entry tactics, you have to take my free trading course to learn all these entry setups. So what I'll do is I'll put a link up there for you in the upper right-hand corner. Grab that link, take that free trading class, because the strategy I'll teach you in that video series will show you a simple trick to know exactly where the best winning trades will be each day, and I'll help you start making money easily with this stuff by teaching my 4 favorite entry patterns. If you're missing the best trades right now, if you're sick of inconsistent results, taking too many losses, definitely grab that link that popped up there. Take that free course. You will love that short video series. And again, I'll put all the important links here tonight. I'll put all those down in the description of the video in case you can't get that pop-up. All right, so be aware of that. That is one of the variations. Remember, there's 3 of them I want to look for. What is the second one? The second one is going to be a double bottom. Okay, double bottoms are very, very common. Again, let's say we make that run going lower. Now, we don't get the 1, the 2 back up again. We pull back, we retest that low. These are even more attractive because, as we always say, whenever we get a strong move in one direction, we have to anticipate they're going to want to retest that low, right? Same idea as we mentioned on the 60-minute. So in this case now, right, now we can do the same thing, right? If they retest the low now, remember, don't try to pick the bottom. Simply wait for those bears to try a couple times here and then use their stops, right, with a failure pattern. Now, oftentimes on these double bottom reversals off the low, oftentimes you'll get that failure. The market will then pop up, and watch closely here. I can draw a trend line off the high here. I can draw a trend line off the low there, and I can grab an entry off the low of that channel. These are very, very common, right? We oftentimes see these things will pop up, make that higher high. We can draw that trend line, find that low, right? And then grab things like a bear trap, right, off of that low, or a failure pattern below the moving average, right? This is one of the best setups that we saw this morning, right, coming in off that low. So think about that move right there and project that over here. All right, that's one of my favorites for tomorrow as well. Again, think about that double bottom now, right? And then trap those bears in. And then whichever one of the entry patterns could be a failure, it could be a trap setup, it could be a pullback setup off the low of that channel. That is the second variation I'll be tracking for tomorrow. The third and final one to buy that range reversal is going to be a V bottom. Now, not the most desirable trade in the world, but again, if we don't get that nice, juicy failure off the low, if we V-bottom off of that low and begin to run higher, the key is we don't want to buy high, right? What we do is, and we look now for bear traps. Okay, this is a pretty easy setup when you know what you're looking for. The challenge, though, is oftentimes when you get this V bottom off the low and it begins to really pump going higher like that, oftentimes that voice in your head gets a bunch of FOMO and you try to buy too high up there. You get trapped out and professionals will be jumping in off that bear trap. So again, we would love to get that nice deep move, trap the bears in and back up. But again, if all we get is that V bottom and we begin to grind going higher, we do not want to chase it. We want to buy as low as we can. We look for prior swings, and one of my favorite tricks is to draw a trend line off these highs, bring it down off that low, and then grab that first test right off the low. I like to get below prior swings. That's where traps live, or at the very least get below the moving average and look for a failure there as well. So keep that on your radar as we go lower. Now, is there possibility that we might take out this low and keep on going? There's definitely that possibility. Right now, though, that requires a little bit more analysis that we have time to go over here tonight. But tomorrow, if we do hold that pullback and keep going, we'll definitely tackle that on the short side tomorrow morning. Now, let's get to the range, the failed reversal, the failed rotation. We mentioned earlier that ranges love to rotate, and the fact that we should be seeing the bears come down, take out these lows, and then that nice range reversal off the low of it. But what if we don't get it, right? What if the market now rips higher and we finally get that big run we talked about in last night's video? How do we trade it? Can I sell it? I definitely can. Can I buy it? Absolutely. Let's talk about that now on the NASDAQ. The NASDAQ and the S&P are very similar, but you're going to notice right away there are going to be some differences here, subtle differences on the 60-minute time frame. Same bear market into a trading range, the NASDAQ. Let's go over now and take a quick look here right at the 60-minute. Now, the one thing you'll notice 60-minute is same thing goes. Nice strong run up there for the buyers. Anytime we see a strong move like that, we're expecting a pullback and a retest of that high. You'll notice right away, look at the buyers jumping off the moving average, right? Good separation off the 21 EMA. And then really for the most part, you'll notice here right now, there isn't a lot of separation on the way down, much like the S&P has, until we get, right there, right? That is a pretty convincing move down, and you'll see this again on the faster time frame here in a moment, but that definitely gives the bears a lot more juice for potentially another leg lower. So we'll talk about that more and why that's important here in a moment. But again, for the most part right now, though, we look really, really good on what's called a measured pullback. The NASDAQ is one of those markets that loves to do this. Prior pullbacks off the high can be measured off the high. So we're sitting right there in a very juicy spot for that reversal going back up to retest the high. But I'll tell you, though, the bears have a lot more juice behind them on the NQ than they do on the E-mini. So what does that mean for me, right? How do we go out and trade that here for tomorrow? I think the most important clue here is on this trading range, we really have the same basic idea, right? Ranges are magnets. They love to rotate. We go up. We're anticipating a rotation going back lower. Now, in my free trading class, I talk about something called a crown reversal. All right, it's a crown reversal. It's basically a 2-try failure. And again, if you're taking my free classes, you know what a failure is. You should know what a 2-try failure is. So let's talk about that. That's the one big difference on the Nasdaq than on the S&P. And then we'll talk about going higher here shortly thereafter. So thank you so much for your patience. If we end up going lower here, it's a lot more bearishness, right? So because of that bearish momentum now, I mentioned that 2-try failure on the S&P. I'm looking now for a 2-try failure and a trap entry, right? A trap entry on this one for the reversal off of that low. We're not going to need that so much on the S&P, but because the Nasdaq is a lot more bearish, a lot more potential for this to hold and continue going lower, what I want to do is anticipate those bears coming in, let them try a couple times, but really try to focus on, and again, it's a 2-try failure with that trap entry, a little bit more protection against that overall bearish momentum. When I'm quite confident on the long side, I only need 2 tries and I can buy into stops. When I'm a little more concerned about this bearish momentum, I'd like to use that trap setup to make sure I'm getting in as low as I can. That's the one big difference about the move lower here on the Nasdaq. And again, if we are going to take out that low and hold that pullback and jump off the moving average, we call these 1, 2, 3 breakouts. In these situations, we find channels, and we'll talk more about that tomorrow morning in our trade room if we do see these bears accelerate and actually get that reversal they appear to be trying to accomplish here. We're not quite there yet. Now, how do we go higher here? Right? What's the best way to make money going higher? Well, we mentioned earlier that failed rotation, right? So if we do go higher here, what's the big problem? This is a big rejection for the bears, right? The bears are, the bears are clearly struggling if we don't get that range rotation all the way back down. I've got plenty of resistance overhead. We mentioned earlier how anytime we see a strong move down in one direction, we're looking for a retest of that low. So I would imagine you'll still see some bears looking to short this thing off the high. What's the problem though? The problem is momentum, right? That's a big range rotation failure on this. So the only way I can safely sell this is I have to anticipate buyers are going to attack this market, and we're going to use that same crown reversal pattern we mentioned a moment ago. Let the buyers try once, let them try twice, and then try to get that short off that trap high. This is how you sell in an overall bull market in a level of resistance above a trading range. Right? Remember, the biggest clue on this is that 60-minute bullish bias right now, right? We're still overall bullish on the 60-minute, and that failed rotation tells me I have to be very, very careful selling at resistance above that trading range. Now, look at how this pattern sets up. Okay, it's a very important way it sets up here. It's a lower low in price and a trap high. Right? So as we go higher, the buyers are trying to punch this thing back up to retest today's highs. Let them try once, let them try twice. And again, you want to be selling as high as you can on this for that crown reversal. Oftentimes what happens is you'll get that crown reversal pattern, and then you'll wind up getting another bull trap set up on the way back down again. Right? And again, like I mentioned earlier, connect the lows up around the high, right? And that will be where you want that add-on entry. Remember, in these situations, it's an overall bull market, so sell as high as you can. Bull trap with a crown reversal, bull trap off the high of that new channel. Where's my target? Target's easy. Back to retest that low. Once we take out that low, then what do we do? 1, 2, right? Back up into that trading range, right? Strong move down. 1, 2, back up, right? We go. And again, a great example in the NASDAQ of how we saw a 2-try. Obviously, take the first profit target off at overhead resistance, move that stop up to point of entry. We never got that big explosion, right? Never got that big squeeze. Might be coming tomorrow. We'll see if we can get it here for tomorrow. Now, how do we buy it, right? How do we buy a breakout going higher here? There are 3 different variations of breakout patterns you'll want to be aware of for tomorrow. The first one is called a 2-try breakout. If we see a very strong run up, we see a shallow pullback and a higher high in price, This is where traps live, right below that swing. Now, notice the difference between this pattern and the pattern I just talked about, right? The previous pattern was up, buyers once, buyers twice, and a trap high for the short. Okay, what's the key difference? The key difference is that higher high in price. Okay, that's what sets up for that bear trap and that two-try trap, that two-try breakout pattern going higher here. Where's my target? Target is back up to retest that high. I like that trade a lot. Remember, it all starts with strong move, right? Very strong, shallow pullback, higher high in price, and that trap, baby, right off that low. That is a fantastic setup going higher there for the buyers. Next one, we take out the high. We pull back to our 21 moving average. We jump off the 21 EMA. We call these 1, 2, 3 moves. This will not be the last time you hear from that, especially with me in the trade room. We talk about 1, 2, 3 moves. This is a 1, 2, 3 reversal pattern. Remember, don't trust that first leg. Okay, the first leg doesn't matter, right? The first leg doesn't matter. They have to hold that pullback and jump. Right? If they can jump off that moving average, then we can go out. We can of course find that new trend line at the high. What I'll do is mark that big low and then look left, right? Look left, go find some prior swings. And this is usually where the money is, right there, right? Right there, either with a bear trap or with a seller failure pattern, but that's where the meat is, right there, right? Now remember, we're not gonna buy that first pullback, right? The first pullback in a ranged market is not gonna be very reliable. Remember, ranges act like magnets. But if they jump off that moving average, okay, now I want that next pullback, right? It's a much higher percentage trade out there. And one nice thing about these 1, 2, 3 moves like this is you can use the first leg as the measuring leg. Okay, we talk about this quite a bit in our free trading course, which again is linked up in the upper right-hand corner there. But trends love threes. They'll go 1 leg, 2 leg, and 3 legs. And the first leg is oftentimes symmetrical to the third leg, right? The middle leg is usually the oddball. Right? So don't worry about the middle leg. It's the first leg and third leg. So if we do end up going higher here, that first leg is the measuring leg. Once we know how big that measuring leg is and we know how deep that pullback goes, then we can copy and paste it, and that will give us a good exit. One thing I'm always telling my students in our trade room, if you want to make money, if you want to make more money, don't trade more often. Just get better at getting more money out of each trade you take. Right? The key is not trading more often. The key is getting better at building your position size up to be a bigger position and being better at holding trades. And half the battle is knowing where these markets are going to want to go. So keep an eye on that 1, 2, 3 breakout pattern and grab that first pullback off the low here. The third one is, of course, the pop and grind. The pop and grind is pretty simple. If it pops up and begins to grind and grind and grind, you will see a lot of examples of pop and grind channels in our free trading class, because we see a lot of those in our trade room. I'm going to mark off the high. I'm going to mark off that low. See how simple that is? Okay, whatever you do, do not chase after a grinding move. Find that trend line, copy the lows, and then look left. Look left and grab that first test off the low. This could be a bear trap like I'm showing you right now. It could get underneath the moving average. Bears come in, try to short it. That's a failure pattern, failure into pullback combination, right? We talk about this stuff in that video series, right? Trap, failure, pullback, strength trade. And again, think about, right? First leg, third leg. That'll give you an idea of where that big objective is as we go back up to retest the high. All right, guys, I think we've covered all the bases here now on the NASDAQ and the S&P. Now all we need is a couple hours overnight and see what we get here overnight. Let's wrap things up tonight on the crude oil. Over on oil, Oil's pretty bullish right now, right? The problem is, though, we're right up around that overhead resistance. Let's take a look here quickly at the 60-minute time frame, and let's kind of get an idea of what's going on here right now. We talked about this last night. Not a lot has changed here. That range in the middle chart there, that's the magnet. And again, we know that ranges love to rotate, right? So we go up, we go down. We're trying to rotate now roughly about the amount below the range, the amount above the range. And so we have to assume right now the buyers have their eyes on taking out that 73.47 area. Really, ideally, they love to get back up around that 75, but well, let's not go too far ahead of ourselves here right now, right? 73.5 is kind of the next 73.47 is kind of the next reasonable area of resistance up overhead. So buyers are in control right now. They're trying to finish off that rotation. The challenge, though, is we just ran right into the high that we mentioned in last night's video. So back to our tick charts now. We got that bull move into a trading range. We've rotated off the low, as we mentioned last night, and now we're running into that high. We haven't quite completed that range rotation yet, right? We haven't quite made our way up into that 73.50-ish area that we are anticipating. So the most important thing right now is we have a very strong move in the chart. Anytime we see a strong move, we anticipate another leg in the same direction, but we don't want to buy high, right? We don't want to buy into this overhead resistance. The biggest clue in the chart right now is this trading range. Now, one thing we haven't talked about very much tonight on this video is that ranges, well, we know they act like magnets, but when they break out, they love to break out and pull back. And I would imagine this will probably be where the best buying opportunities are going to be here for oil traders tomorrow. Somewhere around this area, right? That prior high, 71.73, down to the high of that trading range, 71.48, 71.50 area. If I had to guess tomorrow, that would probably be where the best or the most amount of buyers are going to be waiting to get long for tomorrow. That accomplishes everything. It allows us to participate in that next leg going higher. It also keeps us out of trouble because we're not buying too high on this. Now, a couple options here right now. Okay, there's a range below us. There's a big range below us here acting like a magnet. So how would you sell something like this? How would you short this on the way down to that breakout pullback? It's got to be a crown reversal pattern, right? Like I mentioned earlier, if you have a lot of bullish momentum and you're at a level of resistance, you can look for a short, but you have to be prepared. Well, you have to respect the buyers. So the best way to do this is let the buyers try once, let them try twice, and you have to sell as high as you possibly can. Why? Why in this case do I need to sell that bull trap and sell as high as I possibly can? Because as we go lower, buyers are probably waiting down here. What I don't want to do is, in a situation like this, is I don't want to let the buyers try once, try twice, and then sell down here, right? I don't want to short into this area right here because you could potentially be walking right into a bear trap, because now you'll be running right into those prior support levels I mentioned, and you can get your face ripped off, right, trying to sell too low here. So the way you short this thing right now is you wait for those buyers to try once, try twice, and really the only reason why is because we need some sort of trap, right? Some trap entry for that short signal going lower. Okay, in that free video course, you'll learn about entry signals and how we want that strong red candle closing firmly below the moving average, right? That'll be your signal for that crown reversal, that bull trap off the high. And then potentially, once we get down around that breakout pullback now let's trap those bears in, use that failure pattern, and squeeze right back from there. Okay, my favorite trade on this is definitely the buy side. Okay, I like the short side, but remember, anytime we're going against momentum, the odds are much lower. So you want to use a smaller position size, right? I always kind of recommend in my trade room, if you're going against that momentum move, if you want to sell it short, just go half size, go quarter size, right? Save your bullets, keep your powder dry for the nice big potential winners that come going along with that trend as well. All right. So selling off the high and then buying that pullback. And then what would the target be? The target would be back to retest the high and then leave that runner, right? Leave that runner up around those areas as I mentioned before. All right, guys. So trying to short off the high right now, make sure you're selling as high as you can with that bull trap, right? And make sure, though, once we get down around channel low, support level now, get that moving average coming down, trap those bears in, let them try a couple times, and use those stops for the catalyst, right? For that juicy squeeze back up to retest that high. Okay, that's what my favorite trade tomorrow is on the crude oil. And remember, you get 11 o'clock news tomorrow, so get that trade early. If it's too late, it'll get bogged down by the inventory report. All right, guys, I'm going to wrap it up here for now. I'm sure I missed something on the video here tonight. Unfortunately, I can't cover everything on these YouTube videos, but not to worry. Tomorrow morning, 8 o'clock Eastern time, we'll do this all together in our trade room. And speaking of our trade room, if you're looking for a place to come out and learn and trade along, if you're not getting the results you want, if you're tired of trying to put all this stuff together on your own, we trade together every morning, 8 o'clock Eastern time. I'll put all the important information. I'll put the membership links. I'll put the free trading classes links in the description of the video. If you need any help getting started, any help getting joined up, don't be afraid to call the office. You can also use live chat as well. If you need help, definitely don't be a stranger. Reach out and we can definitely help get you into the free classes or give you more information on how to join our morning trade room and trade along with us every morning at 8 o'clock Eastern time. All right, guys, thank you so much for sticking around tonight. I'm a little bit late on the upload tonight, so thank you so much for your patience. Now get out of here. Enjoy the rest of your evening. Get a good night's sleep. Tomorrow could be a very, very good day tomorrow in our trade room. If I don't see you tomorrow morning in the trade room, I will see you back here same time, same place tomorrow night. So be well, be nice to each other out there, and be here next time. Adios, amigos. Bye-bye for now.